Hello everyone, my name is Mehul Singhal and my roll number is 316. Today in this video, we will discuss about composition scheme. So let's begin with this video. So in this video, I will give a brief description about what is composition scheme, what are the advantages of the composition scheme, who are eligible to opt for the composition scheme and other provisions regarding the composition scheme. Composition scheme is an option for specified categories of small taxpayers to pay goods and service tax at a very low rate on the basis of turnover. The objective of composition scheme is to bring simplicity and to reduce the composition cost for the small taxpayer. Basically, the composition scheme was an option for those taxpayers which didn't have enough resources to understand goods and service tax or to comply with the provisions and other compliances with the goods and service tax. The composition scheme provided a low rate of tax which was calculated on the basis of the turnover which was paid by the taxpayer on regular basis. Basically, it ensured that every taxpayer was able to pay tax according to the Cgst Act or any other related act. So, here are some advantages of composition scheme. First point, low rate of tax. As we discussed earlier, the person covered under the composition scheme was required to pay a rate of tax based on his turnover, which was very low as compared to the rate of tax required to be paid by him under the normal scheme. Second point, hassle-free, simple procedures for such taxpayer. The person covered under the composition scheme with minimum resources can pay taxes or file return in a simple manner. Third point, simple calculation of tax based on turnover. The person covered under the composition scheme was required to pay a single rate of tax calculated on his turnover, which was very simple to calculate and could be calculated by himself. Fourth point, a very simple quarterly return. And a person under the composition scheme was required to file a quarterly return, which was very simple and hassle-free for him as compared to a normal taxpayer under the normal scheme, which was required to file a return on monthly basis. Now, we will read the bare act of the Cgst Act 2017. Section 10 states that, notwithstanding anything to the contrary contained in this Act, but subject to the provisions of subsection 3 or 4 of section 9, a registered person whose aggregate turnover in the preceding financial year did not exceed 1 crore 50 lakh rupees may opt to pay, in lieu of tax payable by him, an amount calculated at such rate as may be prescribed but not exceeding 0.5% of the turnover in the Union Territory in case of a manufacturer, 2.5% of the turnover in state or turnover in Union Territory in case of person engaged in making supplies referred to in Clause B of paragraph 6 of Schedule 2, and 0.5% of the turnover of taxable supply of goods and services in state or Union Territory in case of other supply. सेक्शन 10 बेसिकली ये स्टेट कर रहा है वो रजिस्टर्ड पर्सन जिनका एग्रीगेट टर्नओवर पिछले फाइनेंशियल ईयर में 1,50,00,000 से ज़्यादा अधिक नहीं जाता, उनको हम एक ऑप्शन दे रहे हैं कि आप टैक्स ना पे करके अंडर सेक्शन 9(1) एक अमाउंट पे कर दीजिए एट सच रेट जो कि हम कैलकुलेट करेंगे उनकी टर्नओवर इन स्टेट और टर्नओवर इन यूनियन टेरिटरी। अब वो रेट्स क्या क्या है वो इस प्रकार है। एक मैन्युफैक्चरर के केस में 0.5% दिया गया है Cgst एक्ट के अंदर, जो कि Sgst एक्ट के अंदर मिलकर 1% होगा। इन सेकेंड रेट ऑफ टैक्स उनकी बात कर रहा है जो कि रेस्टोरेंट सर्विसेज में एंगेज्ड हैं, उनके लिए 2.5% बताया गया है जो कि Sgst एक्ट के अंदर मिलकर 5% बनता है। थर्ड रेट ऑफ टैक्स उन बाकी बचे कुछ सप्लायर्स के बारे में बताया गया है जिनका 1% होगा दोनों CGST और SGST एक्ट के अंदर मिलाकर अप्लाइज. Now in next slide we will look for some special provision for some special category states. In the light of the following special category states, the turnover limit for composition levy shall be 75 lakh rupees, namely Arunachal Pradesh, Mizoram, Manipur, Tripura, Meghalaya, Nagaland, सिक्किम, उत्तराखंड. बेसिकली ये कुछ स्पेशल प्रोविज़न बताए गए हैं स्पेशल कैटेगरी स्टेट्स के लिए कि जो टर्नओवर लिमिट है हमें जो चेक करनी है टैक्सेबल पर्सन की पिछले फाइनेंशियल ईयर में ताकि वो कंपोजिशन स्कीम में आ सके, वो बताई गई है 75 लाख रुपीज़. और कौन कौन सी स्टेट्स बताई गई है वो है अरुणाचल प्रदेश, मिज़ोरम, मणिपुर, त्रिपुरा, मेघालय, नागालैंड, सिक्किम एंड उत्तराखंड. जो बाकी स्टेट्स हैं उनके लिए हम वही 1,50,00,000 की लिमिट ही चेक. Fundamentally, the composition scheme can be availed in respect of goods and only one service, namely restaurant service. However, there are cases where a manufacturer or trader is also engaged in supply of service other than restaurant service, though the percentage of such supply of service is very small as compared to the supply of goods. To enable such person to avail the benefits of composition scheme, second provision to section 10(1) allows a person who opts to pay tax under clause A, B or C may supply service other than restaurant service of value not exceeding 10% of the turnover in a state or union territory in the preceding financial year, or 5 lakh rupees, whichever is higher. Thus, it can be inferred that where a turnover of a registered person opting for a composition scheme is up to 50 lakhs in the preceding financial year, he can supply service other than the restaurant service up to a maximum value of 5 lakh rupees in the current financial year. Further, where the turnover of a registered person opting for composition scheme is more than 50 lakh rupees and up to 1 crore and 50 lakh rupees in the preceding financial year, he can supply such service other than restaurant service in the current financial year up to a maximum value of 10% of a turnover in a state or union territory in the preceding financial year. करेंगे. Now, before we move ahead, we will look at some few definitions regarding composition scheme. The first definition is aggregate turnover, which is covered under section 2, subsection 6, which means that the aggregate value of all taxable supplies, excluding the value of inward supplies on which tax is payable by a person on reverse charge basis, plus exempt supply, plus exports of goods or service or both, and interstate supply of persons having the same PAN to be computed on all India basis, but excludes central tax, state tax, union tax, integrity tax and cess. This was the definition of aggregate turnover. Next definition is turnover in state or turnover in union territory. It was covered in section 2, subsection 112, which means that aggregate value of taxable supply, excluding the value of inward supply on which tax is payable by a person on a reverse charge basis, and exempt supply made within a state or union territory by a taxable person, exports of goods or service or both, and interstate supply of goods or service or both made from the state or union territory by the said taxable person, but excludes central tax, state tax, union territory tax, integrity tax, and the aggregate turnover term is used to see whether a taxable person can opt for composition scheme or not, which was 1.5 crores in the previous financial year and 75 lakh rupees for special categorized states in the previous financial year. The turnover in state or turnover in union territory term is used to calculate the rate of tax which was to be paid by a person on the basis of his turnover in state or turnover in union territory. Cess. Now we will look at the other aspects of the composition scheme. First point is no classification of rate of tax. There is only a single rate of tax which has been prescribed under the composition scheme. Second, required to issue bill of supply. The person making taxable supply has to issue a bill of supply instead of tax invoice. Third point, he cannot avail input tax credit on the goods purchased or service availed by him. Fourth point, he cannot collect tax from the recipient of supply of goods and service made by him. Fifth point, all registered persons having the same parent have to opt for the composition scheme. It means that if a person has multiple registration with the same PAN, he has to opt for the composition scheme for all the registered person having the same PAN. Sixth point, no restriction to procure goods from suppliers located in other states. It means that a person paying tax under the composition scheme has no restriction that he can purchase goods from the supplier which is located in other state. Now we will look at the procedure for opting under the composition scheme. The person who are already registered under the GST Act shall file an electronic intimation in the form GST CMT01 on the common portal, which is www.gst.government.in prior to the commencement of the financial year for which it is to be off. He shall also furnish the statement in prescribed form within 60 days from the commencement of the relevant financial year. Any intimation in respect of any place of business in a state or union territory shall be deemed to be an intimation in respect of all other places of business registered on same PAN. The option to tax under composition scheme shall be effective from the beginning of financial year. For the persons who are registering for the first time under the GST Act have an option for the scheme by providing necessary information under Part B of Form GST Registration 01. Such intimation will be considered only after grant of registration. Composition scheme will be effective from the date from which registration is effective. It means that he will be first registered under the GST Act, then only his option for the composition scheme will be considered. Now we will look at some persons who are not eligible for the composition scheme. Section 10, subsection 2 states that the registered person shall be eligible to opt for composition scheme if he is not engaged in supply of service other than restaurant service, not engaged in supply of goods not liable to tax, not engaged in interstate outward supplies of goods, not engaged in making any supply of goods through an electronic commerce operator who is required to collect tax at source, and fifth, not engaged in manufacturing of ice cream and other edible products, pan masala and tobacco, and manufactured tobacco substitutes. However, in case of other supplies, the limit has been provided and we have already discussed in the previous slide. Conditions and restrictions for composition levy which are covered under GST rules are: he is neither a cash or taxable person nor a non-registered taxable person. Second condition, he shall pay tax under subsection 3 or 4 of section 9 on inward supply, which is basically the tax payable by him on reverse charge basis. Third, he was not engaged in manufacturing of goods notified in section 10(2) during the preceding financial year. Fourth, he shall mention the words composition taxable person not eligible to collect tax on supplies at the top of the bill of supply issued by him. Fifth, he shall mention the words composition taxable person on every notice or signboard displayed at a prominent place at his principal place of business and at every additional place of business. Now we will look at how the option to pay tax under the composition scheme lapses. The option shall lapse with effect from the day on which the registered taxable person fails to satisfy all the conditions mentioned or opts to pay tax under the normal scheme. Such person shall be required to pay tax under subsection 1 of section 9 from the day he ceases to satisfy or withdraws. Third point, he is required to issue tax invoice for every taxable supply made thereafter. Fourth, he shall file an intimation for withdrawal from the scheme in prescribed form within the 7 days of occurrence of such event. However, such shall be allowed to avail input tax credit in respect to the stock of inputs and inputs contained in finished and semi-finished goods held in stock and on capital goods on the date of withdrawal, and furnish a statement containing details of such stock held in within 30 days of withdrawal of the option on the common portal. The effective date from which withdrawal shall take effect shall be date indicated by him in his intimation, but should not be prior to the commencement of the financial year in which such intimation is being filed. Basically, a registered taxable person could be required to pay tax under the normal scheme in section 9 subsection 1 from the day he ceased to satisfy the conditions of withdrawals from the scheme. The conditions could be that his aggregate turnover exceeds the limit which is required to opt for the composition scheme, or he fails to comply with the condition restrictions which are imposed on him, as we have already discussed in the previous slide. Then such person shall be liable to pay tax under the section 9 subsection 1 from the day he ceased to satisfy or withdraws from the scheme. Now we will look at some other provisions regarding composition scheme. Section 10(4) states that person paying tax under composition scheme shall not collect any tax from the recipient on supplies made by him, nor shall he is entitled to any credit on of input tax, which we have already discussed in the previous slide. The next section is section 10(5). If the proper officer has reasons to believe that a taxable person has paid tax under subsection 1 of section 10 despite not being eligible, such person shall, in addition to any tax that may be payable by him under any other provision of this Act, be liable to a penalty, and the provision of section 73 or section 74 shall mutatis mutandis apply for determination of tax and penalty. It means that if the proper officer finds a taxable person who is paying tax under composition scheme, however he was not eligible to pay under such scheme, then such person shall be liable to tax under any other provision, and he shall also be liable to penalty, which may be defined under section 73 or 74. Now, in the next slide, we will see how an option under the composition scheme can be revoked by proper officer. When the proper officer has reason to believe that the registered person has wrongly opted for the scheme, or he has contravened the provision of the scheme, then he will seek a reply by issuing a show cause notice to such person in the form Cgst CMP 05. This notice is to be replied within 15 days of receipt of the same. Thereafter, within 30 days of receipt of reply, the officer has to issue an order in form Cgst CMP 07, either accepting the reply or denying the opinion to pay tax under the scheme. Subsequently, the registered person who has been denied the option to pay tax under the scheme has to forward a statement in form Cgst ITC 01 containing details of the stock of inputs and inputs containing semi-finished or finished goods held in stock by him on the date on which the option is denied. बेसिकली अगर प्रॉपर ऑफिसर को लगता है कोई भी रजिस्टर्ड पर्सन ने रॉन्गली ऑप्ट कर दिया है स्कीम के लिए या फिर उसने कोई प्रोविजन कॉन्ट्रावीन कर दिया है, तो वो उसको एक शो कॉज नोटिस इशू करेगा। अब वो नोटिस को रिप्लाई उस टैक्सेबल पर्सन को करना होगा 15 डेज ऑफ द रिसीप्ट ऑफ द सेम। जब उसको मिलेगा उसके 15 दिन के अंदर अंदर उसे रिप्लाई इशू करना होगा। फिर जैसे ही प्रॉपर ऑफिसर को रिप्लाई मिलेगा तो वो 30 डेज के अंदर एक ऑर्डर इशू करेगा इन फॉर्म GST CMP 07। या तो वो उसको एक्सेप्ट करेगा रिप्लाई को या फिर उसको ऑप्शन डिनाई कर देगा इस स्कीम के अंडर पे करने के लिए। सब्सिक्वेंटली रजिस्टर्ड पर्सन डीम हो जाएगा कि उसका ऑप्शन लैप्स हो गया है अंडर द कंपोजिशन स्कीम एंड उसको एक स्टेटमेंट फाइल करनी होगी जो पहले हमने बता रखी उसमें क्या क्या डिटेल्स होनी चाहिए। So this was the brief description about the composition scheme. I hope you enjoyed this video and press the bell icon.